So you saw Apple all day was banging up against that 380 level, opened up, down here at 378, dropped down. Every time it would come up here, it would just get sold off, sold off, sold off. So now back to the my pain chart here is even though because volatility is so high, you guys have been seeing, move Apple moving $15 a day and all this. Um, that's why don't have these probability ranges up still. But this is the exact thing I'm saying is don't get scared. Why? Oh man, Apple's running out of juice here. Apple, it's not going higher. It's going back down, or the sell-off isn't done. No, look what you have right here. You have these 380 strikes that are the highest open interest. So you're going to run into selling pressure here, and it's going to knock the stock back down towards this area. And what do you know? Apple closed, 377 or below this 380. So it's good to, even if you're not playing these for any reason, it's good just to know in your head why this stuff is happening. So um, that is how I am using these right now, this data. And then I said in last week's video, the volume, it's not sustainable. These moves in the market in Apple, you can't be trading 40 million shares every single day. You're going to run out of sellers eventually, and I think we are. So in Apple's case, I think today was options related, why it couldn't go above 380, and so Apple lost a full day of trading, and that's why I'm in the camp of too far too fast with Apple does not apply because it loses so many trading days with options. Now coming back to my Thinkorswim, it's they're doing maintenance or something, so it's not working right now, so I can't go back to that chart. That's why I'm just staying on this. But you have up here now, so Apple's up here at this. Where are we? So 377. So we're right here right now. So if Apple were to fall back this way, you're gonna have some buying. All these are gonna have to close up, so you're gonna have some buying pressure there. And then so if Apple opens up, on Monday at 377, just right where it closed, it has free reign to run all the way up to here before you'll get into some selling pressure. So that's a good thing. So and usually they kind of let Apple go. Right now the market's a little different because there's so many headlines out there as far as Europe goes. So we'll have to wait and see. But as far as the options goes, it's allowed to run up to this 400, and then we'll have to reassess. You may see how this 360 has a lot open still, and Apple's up here. So all these are in the money. These are going to have to close out this week sometime. So you may see a little bit of selling pressure even if Apple opens up right here. These are people are going to have to close out. So you may see Apple for no reason, just right here in this open area, start to kind of sell off for no apparent reason. It's just going to be because of these. So don't get scared. Once these things start closing down, you'll be fine. Or if Apple just sits still for all next week, just know nothing's wrong. There's just a lot of, you got 25,000 contracts here. The market doesn't have the most confidence in general, in the S&P. Plus, if it comes up this way, it's going to have these. So we'll kind of wait and see. But so far, Apple can go up to the 400 area. Now, to the broad market, like I was saying last week, why I think, around here the bottom is being put in, or last week I said it's getting real close. Just because the volume, you can't have that much volume. Here's another good bullish sign. So you have me saying, Apple can go up to this 400 area, so that's $25 gain that it can. And then the total market, what's good, I'm just going to this old YouTube clip because, like I said, the TD Ameritrade's down, or Thinkorswim. Oops. So this is the spider. It's probably going to be blurry on your side, sorry, but here's the spider, and it's for this coming up week, the August expiration. So here, this is the 130 strike. Just take my word for it. This is the 130 strike, and it still has about 400. This is the week old data, but it still has about 400,000 contracts that are open. So what's going to happen is, and the spider's down here, at 118. And so what's going to happen is these are all going to close up. That's going to create buying pressure because the market maker is going to, well, they're going to have to buy up their shares so they go flat. I don't have time to fully go into it. There's a bunch of past videos that I've kind of explained. But anyways, it's going to create buying pressure. So that's another reason that the market can get a leg up. And if that happens, and this is allowed to run, so it's next week sets up for it could be a nice little rally. Another thing why I was thinking the market is, as in referring to last week's video, is if you come over here, this is the CBOE as far as the VIX goes, the VIX futures. And so go to the futures exchange on the CBOE. So here's in the address bar, cfe.cbo. And here's your VIX futures, and they just were in major backwardation. So you had, the spot VIX at 45, but these were all shown. So this is, August, September, October, November, December, and so on. And these were all at this was at 35, while this was at 45. And then these were down, just like this, either 30, a little higher. But we'll use today's data. So the market right now is saying it has 36% volatility in it, when the futures, looking out farther to September, October, it's only pricing in 27. So the market sees it's not going to be volatile for very long, and that's how, referring back to last week, how I, was looking at the market bottoming too, because this was up at 45, but the further out months were not showing that there. So that was another indication. And then just to finish out this week, this is on ivolatility.com. If your platform should have, implied volatility and historical volatility, you should be able to chart it on your own. But if you can't, here's iVolatility. You can sign up for a free account. It'll be 1 day delayed data, which is for the free account. So this is Thursdays. And so this gold is the implied volatility. You see Apple way up here at 40. It came down today, but we'll just use yesterday's data way up here at this 40 range, while the historical is down here at this 35, really in this 24 area or so. So that's when you would want to, do I really want to buy options right now? This shows what volatility is. It kind of shows how expensive an option is, the premium. So do you want to be buying an option when it's at its highest price, or do you want to be buying an option when it's at its lowest price? So you want to be buying options when it's low, and you want to be selling them when it's high. So if you're up here and the volatility is this high and you just bought a call, a September 375 call, you have a lot of current to swim upstream against, because this is going to come down, plus is the price of Apple going to sit flat? Is it going to go up? There's just you need to really study up on volatility. It's just as important as the stock actual moving. How it works is, so this historical volatility is 30 days behind. So the blue line is going this way. The gold line is going forward. So we'll just take this little area right here, for example. It was saying in the past, so right here in time, in the past 30 days, so this area, this was the actual volatility. Historical is actual volatility. So it was only 24%. At that time, though, look what the market was pricing in. So for the noses here, goes to here, and then this prices in forward. So at that time, it was saying volatility in 30 days is going to be 35%. Well, was that true? No, it was only 24%. So you would want to have sold options here because you're calling their bluff. It's not going to be that high, and so that's what's happening right now. Anytime the numbers are up here, it's a great time. I think it's always a good time to sell options, but it's even better when it's up here. You definitely don't